Hello, everybody. Welcome to Wednesday. The S&P 500 was down 1.3% today, and it was a really interesting battle that was happening. We have three components in our portfolio model right now that are in the value category. One was up, the other two were down just a little bit, a lot better than the S&P 500. So it kind of shows you in a similar situation yesterday, shows you, what's happening as far as, the growth versus value battle. Friday and last Friday and this Monday, growth did fantastic, like just like it used to, so we had a couple pieces that did well with that, but we've greatly reduced the growth components just because there seems to be value. If you look at it kind of week by week, is really doing better than the growth, and I think things are turning over on the growth side, at least for the moment. A lot of profit taking going on and those types of things. We saw the bond market, fall some more today, which of course brings the yields up. And again, those yields are competitive to the stock market, and that really kind of created some problems for the market as a whole. And yet again, we're seeing this rotation into the value side. Now, we do have this inverse position in the portfolio, which was up about 1.3% today. And we have an energy position also, which is also a value position, actually, because energy was way, way down during the pandemic. And that was up almost 1.5% today. So I think the portfolio that we have with kind of these two growth pieces, which did poorly today, but yeah, they did great on Friday and Monday. We got this balance. This market is going, sideways and very volatile. And as I mentioned, it's almost like different currents hitting each other. Um, and I love what we've got right now in our overall model. Now we still have a lot more growth positions in the taxable accounts than we do in the IRAs and Roth IRAs and those types of things, just because we still have giant gains. A lot of those gains are short-term gains, which is very expensive tax-wise. I do not recommend selling those positions, even though they suffered today and what have you. Let's wait and see what's going to happen. We won't hold on to them forever if they continue to have trouble. But clean energy, innovative technology, genomics, these aren't going away. I think they're just going to underperform for a while here as people take some profits. Eventually, they'll get down to a level potentially where people will buy them back. But if they're really starting to fall apart, we'll go ahead and take the gains. But a lot of these, we have 40, 50, 80% gains on average. I don't want to take those, unless I really have to. Apple, everything is in that category, actually. So still holding on to those. Um, Really fascinating time frame. This is a really unusual portfolio design that I have right now that I think is working great. And I'm just waiting for other things to kind of come along and signal what we should do. If the growth keeps falling apart, that'll trigger my stop losses and we'll move more into the value or even into the inverses. And so, I build portfolios every single day for different directions every day. And I've got one that I'm looking at. I got a new pie chart. I got a new pie chart tomorrow. And so I'm constantly building these just in preparation for changes that are happening with the markets. So it's really different than it was, last year, for example, where there was so much consistency into these one areas, technology and healthcare and those types of things. So uh, look forward to seeing what's going to happen tomorrow. I find these situations very fascinating. I think we're in a good spot. We've got some good, pieces in place here. So hopefully we can keep, kind of riding through this. So I will see you next tomorrow. Thank you very much.